Hey everyone, I'm Jeremy Szafron, and this is Kitco News. And if you haven't already subscribed, be sure to hit that button. And today on Chart This with Gary Wagner, gold and silver are experiencing downward adjustments from recent highs, with movements generally ranging in the mid-2300s for gold and just above that $27 mark for silver. Now, these shifts are partly due to some profit taking in a week-long liquidation, typical of routine corrections within their broader bull market trajectories. Adding to the mix, though, tensions in the Middle East seem to have eased a little bit, which usually lessens the appeal of gold and silver as safe haven. But despite this week's pullback, both gold and silver maintain a solid footing in the market, supported by strong uptrend over the past few weeks. Let's, of course, dive into it now. Our resident technical analyst, Gary Wagner, joining us from Hawaii. Hey, Gary, how's it going, my friend?
It's going well. Great to be here.
Yeah, great to have you. It's been a couple of weeks since we've had you on the show, so I wanted to kind of give a little bit of a lay of the land. Last week, we saw some declines in gold prices. Walk us through what happened in the chart and the technical patterns of what might predict these drops in the future.
Certainly. Well, we'll start by looking at a daily standard candlestick chart of gold. When we do that, we can see that since about the middle of February, when gold was trading at $2,018, we've seen it rise tremendously from, let's round down, from 2,000 above 2,400. That's a $400 move in a series of a couple of months. That's a phenomenal move. The break that we saw today saw gold decline by a little over 2%, about $63. And in the case of today, it is fundamentally based. Late last week, it was announced that Israel had sent some planes to Iran, but their response or retaliation that they had promised was tepid at best. I believe they were simply trying to show face, but at the same time not aggravate anything, not make the tensions worse. In other words, ease the tension. And both Israel and Iran have stated that there is not going to be any more retaliation on either part. And that is excellent news for world peace as whole. We have enough problems as it is without Iran and Israel into the mix of all the geopolitical concerns we have worldwide.
Yeah, absolutely. I mean, the geopolitics aside, when we look at what gold is kind of performing, you mentioned that $400 move in just a couple of months. I'm curious, if we start seeing some of this resilience on the price, what do investors look at in the chart today that might indicate the future movements? I mean, if this was just Iran and Israel, I'm curious if we couldn't see that on the charts. Is there any hint as to what we're seeing with inflows and outflows in the future, Gary?
Well, when we look at this chart, you'll see I do have a basic Fibonacci retracement. It's a standard tool that market technicians use to ascertain, after a market has had a tremendous rise or tremendous fall, what the correction might be. And in the case of this particular move, as I said, from just over 2,000 to well over 2,400, we've broken through the 23.6% fib retracement. That's the first level that we would look at. That comes in at 23.45. We are at 23.45.70, so just $1 below that. If we see a continuation, in other words, if this is not a one-off, we won't really know till the next couple of days, we would look for gold to move to about 2280. That is the 38.2% fib retracement. These are still in line with a shallow correction. Of course, anything new on the fundamental fronts, whether it's an inflation report, I guess we'll talk about that in a little bit, or comments by the Federal Reserve, that could set either gold moving higher or lower. The Fed has been really hawkish recently, stating that their work on inflation is far from over. They've talked about the fact that we would wait longer for the first rate cut. In fact, it was presumed that the Fed would initiate their first rate cut in about June at the June FOMC meeting. Now, the earliest traders anticipate, and this is according to the CME's FedWatch tool, there's a slight chance of July being what I'm calling liftoff, the initiation of a series of rate cuts, or maybe September. Now, if they do wait till September, there are a couple of meetings between then, September, November, and December. However, it's unlikely that they'll do anything just before an election. So that kind of adds into the mix. So it's unlikely that they will initiate a rate cut in November. So if they do September and then December, that would be 2 cuts rather than what they had stated was their goal, which is 3 rate cuts of 0.25%. So that's what we really want to keep our ears and eyes looking at, is comments by the Fed and information on inflation.
Yeah, definitely a lot of macro narrative really moving the markets right now. I'm curious, though, Gary, when we talk about this move that gold's made, that couple of months from the 2,000 mark to $2,400, when we look at the gold chart, is this a healthy pullback? I mean, is this a realistic pullback? It doesn't seem like it's, it seems like it's more smoke than fire here.
Well, you can call it more smoke than fire, but realize the last time gold moved this much in a single day was either January or February of 2021. So it is not a common occurrence to see gold decline by $60 or rise by $60. That is a significant move. And the significant move is because they had added premium to the idea that there might be more conflict between Iran and Israel. When that seemed to be alleviated, all of that premium rolled out of the market and rolled out relatively quickly. It rolled out through Sunday here in the mainland and in Canada and in Hawaii, because that represents Monday morning opening of trading in Australia. I believe that the market opened down about $12 and consistently moved lower throughout the day yesterday, which of course was Monday's trading activity. It accelerated, obviously, once it hit Hong Kong and then London.
Right. Of course, we'll be watching all these news stories, too. We'll have more at Kitco News. Gary, let's turn over to silver quickly here. Last week, we had a downturn, and it was pretty noticeable, but less severe than gold, for instance. From the charts, what technical insights can you share about silver's resilience here and its susceptibility to, this broader market trend that we seem to be seeing for this metal?
Well, what I have to look at is the size of this candlestick. And that's why I tend to like to use candlesticks rather than a bar chart, because on a bar chart, it's a single vertical line with just a horizontal line on the left representing the open, horizontal line on the right representing the close. In a candlestick, what they do is they draw a rectangle or a box around the open and closing range. And what's significant when we look at silver is there's very little, if any, upper wick, meaning the open itself and the high were pretty much identical, maybe a tick, but I don't even see that. And then when we look at the low, you can see a small wick here. So that means current pricing is at the low of the day. So when the market opens at the high and closes near the low, that says that during this trading session, it was significant in that there was selling pressure all the way through, that at no point did bullish factions dominate trading activity. Now, in terms of the drawdown, it was more significant than gold. I'll pull that up. The drawdown's $1.51, but it's 5.25%, considering that gold itself lost much less, and we'll go to that. It dropped 2.73%. So not quite double, but a significant drop nonetheless when we look at the two metals. Now, in terms of support for silver, we want to see if this is a one-off or not. The fact of the matter is when we look at technical data, there's almost a void between 25.80 all the way up to this recent high, which comes in right around 29.97. I'll round it up to 30. Now, if we look at this particular area, which is $25.80, you have this one top that occurred in November of last year. You have this other top that occurred in March of this year. It came down a little bit and broke very strongly through this resistance area. And you had a 2-day move in which silver went from about 25.24 up to $27 in 2 days. That's an exceedingly strong market. When we look at other rallies, such as this rally back in November, you can see that the size of these candles are contracted compared to the size of these two candles. And what that's saying is that not only did buyers step in aggressively, but it also probably ran through stops. And so that's why we had such a significant move up. One of the other ways we can look at that is to convert it into a Heikin-Ashi. And what that will do is, because we are using the midpoint of the prior candle to represent the open, you can see it's a much clearer move up. You can see how large these candlesticks are at the beginning of the rally. They start to get smaller, but there's still the absence of lower wicks. And that's what we look at on an uptrend, is whether or not there's a lower wick. Because if there isn't a lower wick, what that says is that no point during the trading session were traders able to take prices below the midpoint. So that's significant. But when we get to this top here, you see that the bodies turn into very small bodies. You get alternating candle color from green to red to green, and you also have significant tails both above and below the real body. So that's pretty significant. What that tells me is that if we do see a continuation of silver trading under pressure, and let me convert this back to a standard candlestick chart, on a technical basis, the first level of support is about $26.10. So if this is a one-off, that's one thing. We could easily see a rebound. But if it is not, then we would probably drift lower to about 26.25 basis, the most active July futures contract.
26.25. I mean, there's so many analysts talking about $30 silver, $30. We almost got there. That's out of sights here.
Well, I mean, we did get there, in my opinion. We traded as high as about 29.88. And that's significant, because if I pull this chart back, and I've got to go quite a ways to see the last time, and let me go ahead and rescale that. The last time we saw silver move to that level, you've got to go back to January of 2021. This high here came in August of 2020, and this top here, and these are a series of lower tops, by the way, and this top here coming in June of 2021. And then you had to wait for the last top, which was 29.35. What is significant about the recent move is, and let me just enlarge it a little bit, is that the top that came in back in March 2022, the intraday high, meaning this wick that's right there, took that price point out. However, it didn't close at that level. So that means although traders were able to push it to that high point very near $30, it was not sustainable, and we couldn't see a continuity or a continuation of buying enough to hold prices at that price point.
Right. So we couldn't hold it at 30. You know, I'm curious, you've been doing this a long time, my friend. When you look at technical analysis, and then you start to think about the market sentiment out there and some of these macro figures, how reliable are sentiment and momentum indicators in predicting its price movements today? Has that changed a lot?
Well, I don't think that's changed for hundreds of years.
Hundreds of years.
Only because the Dojima Rice Exchange, which was the first futures exchange, was founded in the 1600s. And people wanting to make money, wanting to buy low and sell high, has not changed since then. Market sentiment has so much to do with where a price of a stock or commodity is going. When you consider, when we look at a stock, for example, and we take what's called book value, you break all the components of that company. What is the relative worth of each component? You add that together, and let's say that equals $100. Typically, the stock is not at 100. The stock might be at 110. It might be at 95. And what the differential between that book value and what the stock price is market sentiment. Because if people are bullish on a commodity or a stock, they will bid it higher than current pricing. And so that's always been exceedingly important in moving any asset, whether it's a stock or commodity, is market sentiment. I think that hasn't changed, and it will continue to be a primary fundamental force moving the markets higher or lower.
Well said. Finally, let's talk about the U.S. dollar. I mean, it showed some interesting strength last week. And of course, this influences precious metals price. I'm curious, this week's a big, interesting week. We got the PCE data out towards the end, Magnificent Seven's earnings on the S&P side. We've seen the market rally a little bit after that sell-off last week. What's the dollar doing? What can we anticipate here, Gary?
Well, when we look at this again as a daily chart, and if we go back to, let's say, the 12th day of March, when it had a series of days where you had very, very close closes in the market, it moved from about 102.37 up to the recent top, which is at 106.37. So that's a 4% rise in the dollar. Now, realize when we talk about dollar strength or weakness, we're not talking about buying power of the dollar. Because buying power of the dollar is completely different than dollar strength or weakness. Strength or weakness is comparing it to the basket of currencies that the dollar index is trading against, which I believe are about 6 or 7. And you've got the euro dollar, you've got the Swiss franc, the British pound, the Japanese yen, the Swedish krona. And so when you see dollar strength, what that is saying is that the dollar is stronger relative to those currencies. However, there's a lot of talk, and I'm in the same camp, that countries as a whole have been on a race to zero. In other words, the way they have changed their economy from having hardship or a possible recession is to increase the money supply. In other words, turn on the printing presses. When you do that, that devalues a currency. So when we have dollar strength, what that's saying more than anything else is the printing presses are running more hours and printing more money in other countries that the dollar index is trading against. In terms of buying power of the dollar, that's inflation. That is the definition of inflation, is how much your dollar can purchase. Inflation continued to rise, and they had been hoping that as it was, let's say 3 months ago, back in December and November of last year, we had a steady decline. If we look at it from June of, I believe, 2021, when inflation went to 9%, or 2022, excuse me, that was the first time the Federal Reserve raised rates by 0.25%. And that's when inflation was just over 9%. So we've taken from about 9% to about 3.5% where it is now. But the 3.5% is a tick up from recent numbers last year, which were just below 3.5%.
Yeah, wild ride, of course, this year. We're seeing all this economic data. We'll be keeping an eye out for PCE. Market pricing in 2 cuts as we speak instead of that regular 3. Gary Wagner joining us from Hawaii. Wish I was there having a pina colada with you, my friend. Thanks for coming on today.
My pleasure, as always.
Thanks, Gary. I'm Jeremy Szafron for Kitco News. Thanks again for tuning in. Be sure to subscribe and to like our channel. And, of course, go and comment, too. We'll see you next time.